Meanwhile, the Nigerian all-share index shared 0.19% to close at 38,424 points. However, week on week, it's up 1.4%. The losers for the day include Transnational Express, Nemeth, Pharmadeco, Livestock, and Deep Cap, while the gainers were Better Glass, Prestige Assurance, RT Briscoe, GSK, and Unity Bank. Joining me now to discuss the Nigerian equities market, focusing on the banking stocks, is Muyiwa Oni, analyst at Stanbic IBTC. Thank you so much, Muyiwa, for your time.
Thank you for
Let's talk about general market trends. We saw the market giving into some profit taken yesterday. Well, I talked to some brokers and they said, well, after we had the 5 days of uninterrupted gains last week, it was a no-brainer that investors would likely take profit. Now, do you think that trend could continue today?
So I would say there's a possibility that we could see that trend continue because, like you highlighted, we've seen strong performance across the board in this on the market. And I would say if you look at a few banks, we've actually seen some strong reversals since the dip we saw a couple of weeks ago. So the likes of Zenith Bank, GT Bank, we've seen some positive gains in those names. Diamond Bank as well, we've seen strong reversal in the name. So for me, I think I won't be surprised if we see some flat performance going forward. And also, the results that have come in from the banks have been positive broadly, and also we're still expecting a few names to release as well. So I would say the market could be watching these names to see what the direction of the prices could go.
Well, do you think there's any sort of apprehension ahead of the release of these big names, Zenith, Guaranty Trust Bank, Access, and First Bank?
I wouldn't necessarily say apprehension per se, but my view is that so GT Bank and Access Bank are auditing their half-year numbers, and I would say the performance of these two names would be an indication of where the sector will be going broadly. And so for me, I think obviously the market will be watching those two closely, because any variance in the trend we've seen so far obviously could indicate that we could see some more changes in H2 relative to H1, because I would say over the last 3 years, the trend we've seen with results, it's a case whereby the first 3 quarters come in with very strong numbers, and then we see some disappointment in final year results. And so given that these two would be audited, then there could be an indication for where the numbers could be overall.
Now, finally, what kind of trading behavior on the part of investors are we likely to see post a CRR debit day? That we know that's tomorrow, when banks will be expected to quarantine some of their public sector deposits with the Central Bank of Nigeria?
Trading behavior on equities, I'm not sure if we would see too much of a change in what we've seen so far, because I would say going into the summer season, our view has been that you should be, or shall I say, the initial trend was to take profits, and now that we've seen prices dip, it's really to watch for value. So at some point we upgraded the two of the tier 1 names, GT and Zenith Bank, based on the weakness we saw in their prices. And so our view is really for investors to watch for dips and buy into the dips. And I would say in terms of guidance for most of the banks, a few banks have guided I won't see too much of a change from where numbers were. So UB at the conference call yesterday, indications was that they would be able to weather the storm, and given their, should I say, relatively lower exposure to public sector deposits versus the sector. So they have about 10% exposure to the public sector in terms of their deposits versus 17% for the sector, and the expectation is that the impact will be minimal. But a few banks like FCMB came out with a broad estimate of about 2.5 billion potential income loss based on the reversal. Well, expectation is that we would actually see some dip in earnings for H2 based on this change, given the potential interest income loss that we would see.
Okay.